everyone, and welcome to the Only Land Fan Show. My name is Kendall Lejeune, and our guest today is Tommy Thornburgh. Tommy Thornburgh, president of Prime Corporate Services, is an incredibly accomplished and highly sought-after business advisor with more than 15 years of industry experience in entity formation and tax strategy. On top of helping entrepreneurs establish their own businesses, Tommy maintains a diverse set of entrepreneurial ventures of his own in real estate, stocks, and more. Tommy, thanks so much for joining us. How are you today?
I'm doing great. Thank you for having me. I'm excited about this.
Yeah, I've been so excited to chat with you because today you're going to be sharing a very important topic, which is tax structuring, entity structuring for businesses and land developers and flippers. And so excited to have you. Let's jump right in with how did you get started in real estate?
I going all the way back when I'll take you all the way back. So my parents got divorced when I was 3.
Ah,
And I joke about this at this point, but the only thing that I really believe that they ever really wanted was for my sister and I to be self-employed. My mom was a real estate agent and my dad owned a real estate brokerage. So fast forward, I was 18 years old and I'm doing the whole college thing. I don't know what I want to do. And I drove from Salt Lake City, Utah to Raleigh, North Carolina, and knocked door to door selling pest control. That was my super sexy self-employed start, right? Getting doors slammed in my face and getting told no about bugs. And then a couple years later, so since in 2012, we started Prime Corporate Services. But when I got back from knocking doors, I had a $10,000 tax liability, and that money was already gone. So in 2012, we started this company to be able to help entrepreneurs with entity structure and tax savings. And as we've built and as we've grown this business, I've passively invested into real estate. I currently own about 70, I think it's 78 doors right now. And Prime Corporate has over 300 employees between the tax company and the Prime Corporate main hub. So it's been a journey. It's taken time, but a lot of my investments have strictly been based around depreciation. So I'm really excited about this because land has money there. And depending on how long you hold, active versus passive, I think there's a lot of really cool things that we could talk about from a tax standpoint as well.
absolutely. So, really cool start. Sounds like real estate was in your blood. And so, can you talk a little bit about what inspired you to specialize in tax strategy and entity structuring for real estate?
So it's funny. It's a funny story once again. So I am not a CPA, and I just realized very early that there isn't a lot of great information around how to save money in taxes. And as I told you earlier, with both my parents being in real estate, I saw the stress that would happen every tax year. And so fast forward, I met Steve Harward, who's the CEO of Prime Corporate. And he was telling me about the services and what he was going to offer between entity and taxes and everything else. And it really just caught my interest. So I've been doing this since then, and it has just completely consumed me. What I've realized is there's a lot of people that file taxes, but there is not a lot of information out there that really helps you understand how to capture it, keep it in your corner, and make decisions for yourself on what you want to invest in to be able to give yourself more passive income or make more money for your own business. So I fell in love with it super early. I love what I do. My favorite part of my career that I've made here is taking very difficult entrepreneurial questions and forcing our team of attorneys and our team of CPAs to find common ground. Because the reality is, attorneys want to protect your assets. Accountants want to file your tax return with the path of least resistance. And the truth is oftentimes somewhere in the middle on what your goals are for the future long term. So I've fallen in love with it. It's a really interesting industry, and it's constantly changing.
Yeah, that's a fantastic point. I think that there's so much talk around how to get the best deals and buying it as deep as you can and really maximizing your profits. But we don't hear a ton of people that are just lit on fire about like saving as much of that as possible, right? Especially when it comes to taxes. So you mentioned entity structuring. Can you talk a little bit about what is your experience with seeing entrepreneurs setting up their entities for real estate? And what are some of the most common things that common issues or errors that you see people making when it comes to that entity structure?
Yeah, I love this. So, one of the things that I commonly talk about here is you go to good old YouTube University and it'll make your head spin with how many different ideologies there are on how you should structure your business. So, what I've ultimately tried to do is really build a formula that you can just simplify it as much as possible. So, whenever someone is setting up a business entity, I tell them to really focus on three areas and ask yourself these three questions. Number one is privacy and protection. How much privacy do you want? And how much protection do you need? The protection aspect is going to change based off of building wealth. When you start to generate more revenues, you want to make sure to separate out your assets to separate personal and business. But if you think about that from the beginning, as you build and as you grow, it makes it a lot easier to tie those things together. So that's number one is privacy and protection. Number two is tax benefits. And this is profit and loss, right? It's not what you make, it is what you keep. So, from a profit standpoint, identifying whether you're generating active income or passive income is crucial to maximize on what you're able to keep in your corner. And then the losses tie back into what expenses do you have that are ordinary, necessary, helpful, or appropriate for you to generate income? And how can you make them deductible for the income that you currently have? So that's number two is tax benefits. Number three is credibility. I think it's very important to not only show yourself as a legitimate business, not only for your clientele, but also for banks and lenders. That's a lot of what we focus on is helping entrepreneurs build and develop business credit and corporate funding. So if you focus on those three areas, now you can start to set yourself up for what makes the most sense for you and what's easiest for you. I have a holding company out of Wyoming. Not all states are created equal when it comes to corporate law, right? Delaware and Wyoming are the best because they have the most privacy. But depending on where you live, depending on where you're doing deals, and depending on how much asset protection you truly want, it can become complicated. So that's what we've really done is we've built these customized one-on-one consultations to help entrepreneurs in all sorts of different industries.
Excellent. I love that. I talk to a lot of different land entrepreneurs, and it's very common to hear, hey, I'm just going to set up my LLC and then I'm ready to go. Ready to rock and roll. So, what could be some things that people are missing a little bit when it comes to just, I'm going to set up an LLC and now I'm ready to do business? You gave us some really good points here, but what are some of those more detailed, maybe items that they're missing by just setting up an LLC and then hitting the streets?
Yeah, the first thing that I would say to that is something is better than nothing. So good work for taking action. I think that taking action is so much more important than anything else. That is the entrepreneur in me. I got my first lawsuit over a real estate deal that involved land when I was 22. We can come back to that, but it's a pretty interesting story. I think the first thing to identify is where you live and where you plan on doing deals. A lot of times, what we help clients with is we'll set up some sort of a holding company out of Wyoming if they do want that privacy. And then they'll set up a subsidiary or another LLC where they're doing deals or where they live. The benefit of doing that is now you don't have to identify the deal that you're going to get. If you're going to go get a $100,000 deal a $500,000 deal. What if they both land in your lap at the same time? Now, what's the game plan with it? Are you going to keep it for a month? Are you going to keep it for a year? That's going to change the overall tax picture. But knowing how much privacy you want and making sure that you understand how to identify the type of income you're creating will make it a whole lot easier so you don't get hit with a big old tax bill at the end of the year.
That's great. Now, you've mentioned privacy quite a few times so far. And if so someone's listening to this and saying, listen, all I want to do is just flip land and make some money. And what do I need to be worried about privacy for? Can you talk to us a little bit about why privacy is important?
Yes, for sure. We had a client call us. This is a couple months ago, and they said, "Who's the owner of this LLC? ABC LLC, we'll call it for sake of conversation." They said, "We know that you set this up because it says the same organizer as my entity, and you set mine up." They said, "I want to reach out to this person and I want to give them an offer on this property." So for a lot of you that are watching this that just say, I want to buy land and I want to flip it and I want to make money, privacy probably isn't your top priority. And that's totally okay. But the fact that you know that is extremely important. Where we find privacy to be more important is if you plan on buying and holding, or if you plan on doing something with the property, you can't avoid getting sued, but you can make it more difficult. So if I have a holding company out of Wyoming where my name is not public information, and a subsidiary, let's call it out of Utah where I'm located, and someone wants to sue me, now they're going to have to go through that entity, which is really the purpose of having an LLC, is giving yourself the protection. It's not a requirement. It's more a matter of being aware. But if your goal is to go buy land and flip it and make some money, great. Let's make sure that you have an LLC that's taxed appropriately so that you save that money in taxes.
Very good. Now, Tommy, you mentioned the big P word, protection. And I think that's one of the first things that comes to mind when people think about any type of entity structuring, is that they're just trying to protect something. Can you give us a little bit more insight about what type of protection does it actually provide? And let's say someone is just out there doing business without an LLC, because it's not required that you have an entity to actually do land deals. So what are they risking by not having an LLC or some type of entity set up when it comes to protection?
Yeah, this is a great question. I had the opportunity to speak at a real estate event in Florida about a year ago, and the gentleman that spoke before me was a billionaire. And when we were talking about our businesses, he said, my favorite attorney said, let's just set your business up with the thought in mind of it's not if you get sued, but when you get sued. And I really like that a lot, because for action takers that just go out and buy land and flip it and just make money, it is the least of your concerns. For people that tend to overthink whether or not they're going to make decisions or actually buy land, or if they're actually going to be able to make this work, they may hold themselves up based off of the what ifs. I don't know what could happen. Someone could be riding a dirt bike on your land and something could happen to them that sends them over the handlebars, right? There is an average of 76 new lawsuits that are filed every minute. It's about 40 million a year. And the top three: breach of contract, slip and fall, premises liability, real estate, right? With that being said, I don't know. And I hope that you never run into that situation. But if you're setting yourself up with the thought in mind of it's not if you get sued, but when you get sued, having an entity to separate your personal from your business is best case scenario if something was to happen down the road.
Hey, land fans, looking for your tribe of serious land investors? Join thousands of your fellow land lovers in the Only Land Fans Facebook group. We're talking real deals, expert strategies, and game-changing connections you won't find anywhere else. This isn't just another real estate group. This is the community where land investors come to level up. Join us at onlylandfansgroup.com and join the conversation today. That's onlylandfansgroup.com. See you there. Very good. Yeah, I think that's really good insight because those are some things that sometimes we don't think about, especially when we're brand new and we're hungry and just excited to do deals. That protection is not something that is top of mind, like you mentioned.
Yep, for sure.
So, can you talk a little bit about the tax benefit? So, I think when people talk about or they hear taxes, at least from my perspective, they think about, okay, now we're talking about saving some of that hard-earned money that we've worked to get in this deal. So, what are some common tax deductions you've seen for real estate? Doesn't necessarily have to be just land, but just real estate entrepreneurs in general. What types of tax deductions are you seeing people use in your experience?
Yeah, this is great. This is another reason why I think having an entity in the very beginning is so critical. There is no tax code that says you have to be good at business, right? No, no one would be in business. Everyone's got struggles. It's always difficult. There's always challenges.
Facts.
But there is a tax code that says as long as you have the intent to generate income, you can take business related deductions. So one of the first things that we try and identify is whether it's land, are you a real estate professional or not? So if you are not a real estate professional and you have a W-2 or some other sort of income, you can still take deductions like your phone, your internet, your power, portions of your rent or your mortgage for a designated home office. There's over 250 different deductible expenses for startup entrepreneurial type ventures. So if you're not a real estate professional, how do we look at it as more of a marketing or a consulting type business to really open the doors for you to be able to utilize these additional deductions? Now, once you are, or if you are a real estate professional, there's so many additional depreciation things that you can do that once you go make profit from land, it probably turns into something that's crazy for you not to buy real estate of some sort, have passive income, and then take depreciation. But you can write off vehicles. For those of you that have kids, there's really cool strategies on how you can get your kids involved back into your business, pay them and make it a deduction for you. You can rent out your house up to 14 days a year. The list goes on and on. The number one thing with taxes that I would love for everyone to take away from this, for anyone listening, there's a major difference between being proactive and reactive. And if you are the person that is turning in your tax documents in March and April, it is too late. The only thing you can really do is contribute to retirement accounts, and it doesn't help that much, right? But if you break your year up into calendar quarters, January, February, March, quarter one, April, May, June, quarter two, so on and so forth, going into the fourth quarter at the very least, if you know how much money you've made and how much money you've spent, you'll be able to have a pretty educated guess on what you'll need to pay from a tax standpoint. It'll be between 10 and 37% currently on a federal level, and then whatever the state income rate is for where you live. But the reason I break that down is because if you know what that is, now you can make other investments that will better your future. Maybe it's investing into a community, buying a course, being involved with more people that can help you JV on more deals, buying the phone, the computer, the laptop, something that you know that you want to better your business that now becomes deductible. Because unfortunately, the way the tax code is set up is use it or lose it, right? And when you have a W-2 job, you go to work, you exchange time for money, they take taxes out of your check, give you what's left, you pay your bills. The beauty of being self-employed is you go generate your own income. you reinvest back into your business, and then you pay taxes on what's left. Flipping that upside down really gives you more power and control to do what you want with your income. And I think that is ultimately the beauty of being self-employed. So, biased opinion, but that's probably why I've fallen in love with what I do over here.
Oh, yeah, no, that is fantastic. Talk about empowerment. Whenever you can start making those decisions to strategically grow your business and protect your business, that's remarkable. So you mentioned the term real estate professional. And so can you give us a little bit more insight? Maybe someone's, listening to this for the first time and they've never heard of that actual designation. There is a tax designation for that. So can you talk a little bit about that?
Oh my gosh, yes, this is great. So, when you are a real estate professional, I'm gonna even start with another funny story. I was in Hawaii at another real estate event, and a tax attorney got up there to speak. And the first thing he said, raise your hand if you're a full-time real estate professional. And about half the room raised their hands. And he said, okay, great. Put your hands down. Now raise your hand if you have a W-2 job with insurance. The other half of the room raised their hand, right? You guys should get married. And everyone laughed, but there is some truth to this. My wife got her real estate license and became a full-time professional about 3-4 years ago now. And we strictly did that with the intention of being able to purchase real estate, depreciate real estate, and create more cash flow for our little girls and build the legacy long term. So no matter what your why is, if it's making money now, doing your first deal, building generational wealth, there's going to be different strategies along the way. And when you are a real estate professional, you're putting in 750 hours a year. It's not the most difficult thing to do. It's about 15 hours a week or so. Your primary income is real estate. And what that does for you, it takes the limitation off of what you're able to take from a tax deductible standpoint. So if you're not a real estate professional, there's caps around $25,000 of deductions against real estate. As a real estate professional, you get to take all of that additional depreciation. So not overly important if you're doing your first couple of deals. But once you do your first couple of deals, knowing where you stand does become very important, because I'd hate for anyone to get hit with a big old tax bill and feel like they worked a couple months for free by getting hit with a 30% tax rate on the back end. So knowing where you are and being proactive throughout the course of the year is so important to strategize to be able to make decisions that you really want.
Yeah, that's really helpful. Thank you for sharing that. Because I know that there is the government literally has criteria to say this is what being a real estate professional means. It doesn't mean like I watch a bunch of HGTV and I want to flip a house one day. That's not real estate professional in the eyes of the federal government.
That would be awesome. But yes, that is correct. That's
Awesome.
Fortunately, a lot of the tax code is set up to benefit entrepreneurs. Every year, there's major tax code changes. Last year, they came out with about 70 different changes, and they actually called them the Inflation Act adjustments. And I about fell out of my chair when they admitted inflation last year, but it's obvious that is here, right? That is a thing.
That's
A
it.
lot of people are complaining about interest rates, but they're not worried about saving 5, 10, 20% in taxes. And if you can do both, it really compounds and makes for a much better business philosophy.
Absolutely. Absolutely. So the third point that you mentioned is credibility. And so can you talk a little bit about how you've seen real estate entrepreneurs use business credit to build that credibility, and why is that even important for their businesses? Listen up, land fans. This is huge. We're bringing you the one and only Pace Morby, star of A&E's Triple Digit Flip and the mastermind behind $450 million in real estate deals. He's coming to our virtual meetup on Thursday, December 5th to share how he's applying his creative financing genius to land deals. Head to olfmeetup.com to save your spot today. That's olfmeetup.com. This is the kind of opportunity that changes everything.
Yeah, this is great. I think from a credibility standpoint, people oftentimes buy from people that they like. But when you give yourself the ability to reach out as a business owner, it does create some of that credibility. I think a lot of people, especially if you're just getting started, have a little bit of this imposter syndrome. Can I really do this? I still remember when I was 18 and I opened up my first business bank account. There was no money in it, but it felt good walking out with this folder for whatever reason. If you are the owner of your business, as opposed to calling as Tommy Thornburgh and I'm doing my first deal, I think it goes a long way for the psyche. But the other reason that I love setting up a business from the very beginning, even before you do your first deal, is one of the areas we focus on. And anyone that's US based, you have a legal name, a social security number or an ITIN, and a personal FICO credit score. We want to help you do the same thing for your business. But let's make sure you have a legitimate business name. Let's make sure you have an EIN, an employer identification number. It's like the social security number for your business. But you can also build and develop a separate credit profile for your business called a Paydex score. Okay, it's PAYDEX. It ranges from 1 to 100, and 80 to 85 is like you having a 750 to an 800 credit score. So just a quick example, business credit is not something that happens overnight. I don't know what you'll use business credit for. It could be a year, 5 years, 10 years down the road. But I've never met an entrepreneur that says, I wish I had less money. And I think that's important because 5 years down the road, 2 years down the road, if you start building this credit profile, having additional funding options is naturally going to be a benefit. I've been building my business credit for about 8 years. And probably about 6 or 7 months ago, I've been buying properties in Missouri. My cousin lives in Missouri, so he's been property managing these properties. And we had an opportunity to buy 7.5 acres and 2 mobile homes. And it was it was 150,000. It would have been about 7.5%, 8%. I was like, I've got an open line of business credit at 4%. So I was able to use that, let the business pay for itself, and then I can pay myself from there. So if 8 years ago you told me I was going to be buying property in Missouri, I would have called you crazy. That's not where I was at that time. But you just never know. And having those funding options with lower rates and higher limits, statistics say that self-employed people make more money than W-2 employees. So a lot of times banks are willing to give larger lines of credit for actual businesses. And if you build it from the beginning, it makes a big difference. So does that answer what you're asking there? It's a huge value.
Yeah, that's really great. So if someone is listening to this and they say, I haven't built any business credit, where can they start? And how did you go about building your business credit?
So the first thing that you want to be able to do is you want to get a DUNS number through Dun and Bradstreet. And Dun and Bradstreet has really monopolized business credit. The good news is Experian and Equifax are also involved in building business credit. And over the last 2 years, they've really gotten more involved, which is good news for everyone. When there's competition, that just means that there's more funding options that become available. Once you get your DUNS number, and we walk a lot of people through this, the first step that we walk them through is what we call stage 1, or what we also call internally is accounts that no one really wants. It's things like Granger and Uline and these accounts that are like, what am I going to buy here? But you can still buy things that you're going to use. We have clients that will just buy all of their toilet paper or all of their paper towels. Or the other day, I bought crayons for my daughter on one of the accounts. There's things that you can still find. Give yourself net 30 accounts, which means you're having the company send you the product, sending you the paper towels, we'll say, and you're paying it back within 30 days, what that will do is build up your paydex or your business credit profile so that as you build it, now you can go get stage 2 funding, which are actual credit cards with Chase, Bank of America, Key Bank's got a really cool offer right now. Once you get those credit cards, you can actually start to qualify for lines of credit. So to start, getting a DUNS number, having an LLC or a corporation would be the first move. And then building up that payment history to get larger lines of credit would be next.
Excellent. What are some of the most common mistakes that you see people make whenever they're trying to build their business credit?
Oh my goodness. One of the most common, certainly the most common, is walking into a bank and telling the banker that you want a business line of credit. What that banker is going to do, whose interest is in the bank, banks are businesses, please remember that, is they're going to say, okay, awesome. What's your name? What's your business name? What's your social security number? That is still personally tied and guaranteed to you. So a lot of times when people think that they just want more funding or more credit, they go tie business credit. And because their LLC name is on the credit card, they truly believe that is business credit. But if you pull up your credit report, it's still personally tied and guaranteed to you. So it's not helping you. It's not doing you any benefit. If you go max that card out, it's still going to impact your personal credit. So the two most weighted variables on your personal credit, number one is don't miss a payment. We all know that one hurts your credit, right? Number two is how long have you had an open line of credit? And in order to have an excellent credit profile, it's over 25 years. Only 16 or 17% of Americans have accomplished a 25-year line of credit. So the number one thing is understanding that you have a personal credit profile and you have a personal identity. You can do the same thing for the business. Make sure you legitimize it as a business. Make sure that you actually build and develop that Paydex profile, and it makes a massive difference to separate those two.
If you're enjoying this episode of the Only Land Fans podcast, please let us know by subscribing and leaving a review. Now let's get back to the action. That's great. So Tommy, what are you seeing as the timeline typically when people start let's say their phase 1 Granger accounts and they're paying off in these net 30 accounts? How long before that typically takes to season that enough to where now they can go on to that stage 2 and get those credit cards?
Great question. So if you get so here's I guess we'll tie this in with a mistake and something to be aware of. Not all of these accounts report the same. Some of them report monthly, some of them are quarterly, and some of them are annually. So 3 that I can just tell you off the top of my head: Uline, Granger, Office Garner. These are 3 accounts that report monthly on net 30. If you were to purchase and pay back in 3 to 6 months, you'll have a good enough Paydex profile to qualify for actual banks to get credit cards. Now, lines of credit are probably going to take a year or 2, but 3 to 6 months until you can get some actual credit cards, 0% offers that are tied together with your business. And that's one more reason why I do think it's so beneficial to do that in the beginning.
Yeah, that's great. And are there any minimal or minimum amounts that you have to actually buy each month or anything tied to a number?
Some of them, yes, and others of them, no. So make sure that you do look into that. For instance, Office Garner, I believe that you have to pay, I believe it's like $70 per purchase. So it was really funny. I was on a call with a group of clients just like this. And one of the ladies had just a completely stacked floor to ceiling with toilet paper and paper towels. And she was asking a question, and I was like, either you're a hoarder or you're building business credit. I'm building business credit right now. Yes. So she was ordering more paper towels and toilet paper than she knew what to do with. But it's things like that, that as long as you hit those minimums, that's what's most important. That way you can pay them back and make sure to get credit for them. So yes, there are minimums on a lot of these accounts and they vary. So we could go all day talking about what accounts and what the minimums are, but be aware of what that is before you make your orders.
Yeah, that's really good advice. Thank you for that. We love stories around here, and my ears really perked up when you said you had a great real estate lawsuit story that involved land. And so I'd love to hear the ins and outs of that and what you learned from that experience.
Oh my goodness gracious. It was I was 22. The only real estate I owned at the time was my primary home. So this was my first real estate investment. When people say it's not if you get sued when you get sued, or as I say, I should say, this is real. So I was buying a property in southern Utah and the land was for sale for $80,000. So me and a good friend who still works here with me, we set up an LLC. I'm 22. I think I'm really funny. I'll share this because the only land fan's name is so great. I don't share this. I don't share this often, but I'll share this with you. We set up an LLC that was called Lot Lizard 206. It was Lot 206. We thought we were very clever at the
That's
time.
great. That's great.
So once we purchased the lot, the builder, who we happened to know, said, "I'll give you a deal on the house." We're like, "Okay, what's the deal?" We agreed on a $410,000 purchase price to build on the land that we owned. So we're like, should we do it or should we just sell the land? Forget it. Let's do it. It took 2 years to end up building this house. So we had $80,000 total tied up in this land. 2 years after, one delay after another, he came back and said that the purchase price of the house was going to be 510. Now, not knowing that I should have had the contract reviewed, the purchase price said TBD, or to be determined. So we had to end up hiring an attorney and explaining that Lot Lizard 206, I had to tell this to an attorney, had to explain it to my mom. My mom cried. That was the worst part about the whole thing. But the good news is we had an LLC, we owned it together. And if the property of the house went up, so did the land. So we ended up putting a lien on the house because we owned the land and worked out a deal to sell the land at $120,000. So he bought the land. We got out of the purchase of the house. It was a learning lesson. The money was tied up. Fortunately, we still made money off of that deal, but we should have kept the house. It's worth about $1 million or so now. So it was really bad decisions, one after another. But the point of that is because we own the land, because we had that right, we had the LLC, it still kept everything separate while we went through that process. So start to finish, it was about 4 years before we ended up getting that money back. And it was a total nightmare and headaches. Even though we made 40 grand, we split it 2020, legal fees, everything else. It was not worth it whatsoever. I was happy that we had the LLC to keep it separate, give us the protection. But you just never know. We really knew and liked and trusted that builder, and we haven't talked to him since. So some of the worst scenarios are with friends and family. There's no doubt about that. And in this case for us, it was a friend that just didn't work out. And that happens. That's business.
Yeah, lesson learned for sure. So you talked about protection just now, and there's a term that's thrown around quite a bit when it comes to entity structuring and protection, which is piercing the corporate veil. So can you talk a little bit about what that means and how can people prepare for that to make sure that they are, I guess, in the best situation, best position to protect themselves?
Yes, this is piercing the corporate veil is commonly thrown out, and then it's followed up with control everything, own nothing, right? That kind of goes back to the whole Rockefeller approach, right?
Right.
And a lot of times what we do is when we talk to clients and we give them one-on-one consultations, we will walk them through where they are currently and where they plan on going. What is the game plan on how you can crawl before you walk and walk before you run? So going back to the anonymity or the privacy that I mentioned a million times earlier, the reason that it's so beneficial to have a holding company out of Wyoming is if someone sues my Wyoming company, my name is not publicly listed. So if my Wyoming holding company owns my subsidiaries or the entities that I'm actually doing business in, and someone tries to sue me or someone tries to pierce that corporate veil, I have an additional layer of protection because my Wyoming company owns the subsidiary that I'm doing business out of. Once we have that in place, we can always add things to it. We can add other businesses. We could add estate plans, trust, wills, living wills, power of attorneys. A lot of people doing land deals love putting them in land trusts. There's asset protection benefits in land trust, but you're not doing yourself any tax benefit, right? So depending on what your goals are, depending on where you are with your business, it is not one size fits all. And I think that's so important for everyone to understand. Whether the corporate veil gets pierced or not, knowing your asset protection, how much insurance you need to be able to hold, and what your liabilities are tax-wise, it is a game changer for the business as a whole.
Yeah, that's really good. Now, you just mentioned land trusts. Can you talk a little bit about, for people that are listening to this and they say, well, what is a land trust? Or I thought I was fully protected with having a land trust. Can you talk a little bit about what that actually is doing for the business?
Yes, for sure. So I mentioned a little bit earlier, we have a full team of attorneys and we do full estate plans, trust, will, living will, power of attorney. And there's a lot of different types of trusts and there's a lot of different options. Every state is a little bit different. So for instance, Florida, Texas, they have great homestead acts that really control and protect the primary residence. But a lot of times when people are setting up land trust, the benefit of a trust is to avoid probate. So it gives you the stewardship of the land itself, and you can sell the property with the actual land trust as well. There is asset protection and there is separation. So that aspect of it is great. But a lot of times we don't want to be taking money from a trust because it can be taxed at the highest rate. So if you're using land trust to be able to hand that over to future generations, or if you're using land trust for asset protection, great. Just be aware that there really isn't tax benefit that's tied to that in most scenarios. Knowing the state that you're in, the state you're doing business, that answer could totally vary. I like land trust from an asset protection standpoint, not a fan from a tax standpoint, because there's other vehicles through LLCs or S corporations that can really lower that tax liability more efficiently.
That's great. Now, you just mentioned about holding companies. If someone has already set up an LLC and they're doing business through this LLC, but they don't have a holding company, can they go back and create a holding company, move that LLC? How does that typically work if they need to do something retroactively because they're learning more information about this?
Yeah, really good question. So we'll go into I'll tell you a quick story before I answer this one again. We had a client. I'm at a real estate event again in Florida. I go to a ton of real estate events and speak at a lot of real estate events. And we were at this event, and this gentleman comes up to me and he's like, Tommy, I got to tell you a story real quick. He's my wife and I were listening to one of the webinars that you were doing. And when you were talking about the Wyoming holding company, I looked at my wife and I was like, we don't need that. We live in Florida. So I went to Sunbiz. That's how you set up an LLC out of Florida. And he set up his own LLC using his address out of Florida. All of a sudden, his wife walks over as well. And they purchased their first rental property. And about 2 or 3 months after they purchased it, he said that Florida was hit with a hurricane and the power went out in the house. The tenant just thought that the power bill was not paid. So he looked up where he was paying rent and found online this couple's address. Showed up at 2 a.m, expecting it to be a business address. It was a personal address. And he's banging on the window, banging on the door, trying to get in. They end up calling the police, escort the guy. Everything's good. Nothing ends up happening. But his wife was like, I told him, sell that property. This isn't worth it. We've got 2 little girls. Forget it. So he was like, hold on. I remember hearing this crazy guy talk about Wyoming. Let's see if there's really value and benefit there. So he was wondering the same thing. I have this Florida LLC. Can I just tie it together with a Wyoming holding company? You can. We could have technically just filed an amendment and had the Wyoming holding company as the owner as opposed to him as an individual. The problem with that is there would still show the history that he was the previous owner. So my recommendation to him was, you already have it. Let's just keep that one separate and set it up the right way moving forward. So it isn't that you can't do it. It's just, is it in your best interest? And for their story, it was not, because his wife was going to end up losing it if it was. And this story ends up awesome. They end up setting themselves up the right way. And he told me that because of that, he was able to go full time. He quit his job. His wife quit his job, and he was doing real estate full time. So that's a cool one because it ends with such an awesome success story. But setting it up the right way and understanding that privacy is why I help people understand that so early.
Yeah, that's fantastic. That's really good. Now, you talked about tax deductions a little bit earlier, and that there's somewhat like 250 tax deductions that are available to real estate professionals and more if you're doing marketing and consulting. What are some of the tax deductions that your clients are most surprised about when they hear that, oh, I can actually deduct that?
Yeah, this turns into a more money, more problems, but they are good problems to have, right? If you are just getting started, there's plenty of standard deductions. Phone, internet, power, training courses, books, entities, things of that nature are natural deductible expenses. Once you're making money, you have to spend more money to lower your tax liability, and you have to depreciate more or you are going to overpay in taxes. So a couple really cool ones. The first one is referenced as the Augusta rule. And the Augusta rule it's actually section 280A of the tax code. And how this tax law was created was every year the Masters golf tournament rolls into Augusta, Georgia. And a gentleman that lived there was like, this is chaos. I'm leaving. So fortunately for all of us, I believe it was back in the 1970s, he ended up getting audited for renting his house out and not claiming the income. So he fought it. He went all the way through Congress and it got passed in the Senate. It is now section 280A and it's referenced as the Augusta rule. But what this rule says is that you can rent your house out up to 14 days a year tax-free. So I read this article in Golf Digest. It was probably a year or two ago. There was people renting out their houses for $30,000 a day during the Masters golf tournament, tax-free. Now, you can't just rent your house out for $30,000 a day, but what you can do, and the way that I utilize this strategy myself, is on the 5th of every month, my business rents out my house. I have a rental agreement. I have a reasonable rate, and I make sure to track what I went over, whether it was minutes, meetings, bookkeeping, monthly goals, quarterly goals. As long as it's less than 14 days a year, you can write that amount of money off. So for a lot of our clients, it'll save them $10,000 to $20,000 just like that. So really cool strategy by just renting out your house. Have you heard of that one? You're doing that one this year. We still can do that and make that happen.
That's fantastic. Yeah, that's really cool. That's really cool. Love that. Love that. So
Yeah.
you mentioned courses and things like that. Are there any resources that you would suggest people go check out if they're looking to learn more about tax strategy, entity structuring, that type of thing? Do you have some favorites that you would recommend?
Yeah, I think that there's a couple that are very beneficial. The first one that I would say is just get a baseline. Like we give free consultations to be able to talk through these things. We actually have a really cool tax guide. And maybe what I can do is I can just even have Zach send this over to you, but it's a list of those 250 common deductions. I'm happy to share that
I
with you and you can put it in the notes or in the Facebook
Yeah,
group or anything else. Um,
absolutely.
I think that's a great place to really start. The other thing that I would say is when you Google search ordinary and necessary deductions, there's a lot of really cool things that you can do to tie them back together with your business. A really good tax book, if you want to read a book or if you want to listen to an audio, is Tax Free Wealth by Tom Wheelwright. It's a great book. I actually had a cool story. So one night I was in Arizona at another real estate event, and I had the ability to go to dinner with Robert Kiyosaki. And Robert Kiyosaki was telling me about this book. I hadn't read it, which was a surprise. It's one of the most famous tax books. But Robert Kiyosaki, who wrote Rich Dad Poor Dad, had talked with Tom Wheelwright and ended up writing this book around tax-free wealth. And it's a great book to really just get you thinking about how many of your everyday bills and expenses are actually deductible. I think it's a great mindset book. I think it's a great strategy book. I think it's a really good way to start if you're looking for a book. So either the guide, the book, or just reach out to us and have that one-on-one consultation to dive more into your situation as well.
Excellent. I love that. And for those listening, if you want to reach out and have a consultation with Tommy's corporation, his Prime Corporate Services, you can do that at startprimenow.com. We have that domain set up for you to be able to schedule a consultation there. Tommy, thank you so much for sharing so much of your knowledge and wisdom with us. I'd love to dig in a little bit more, learn a little bit more about you. What's your personal definition of success?
My personal definition of success has changed drastically since I've had kids, and that's being able to spend more time with them, being able to create more memories with my two little girls is success. I would have answered that a lot differently. I've worked 6 or 7 days a week forever until my daughter was born. From the time I was 18 until 3.5 years ago when my daughter was born, I would work every Saturday and sometimes Sundays. Having my daughter was the first thing that really changed my perspective on what that success really means. For me, it's being able to spend time with them and be able to create memories. And they say money doesn't create happiness, but it's pretty rare to see someone upset on a jet ski. So if I can be able to still generate money and spend more time and have more freedom to spend with my girls, that is success to me in my book, currently in my life. So that's what it's all about for me right now.
Absolutely. I love that. I love that. And you've mentioned a few authors. Do you have some favorite entrepreneurs, business owners, authors that you like to follow and read?
Yeah, my absolute favorite is Gino Wickman. He's got two really awesome books. Traction, which we have based our company meetings around for an L10 strategy with making sure that the entire team is getting things done. And then my absolute favorite business book is Rocket Fuel. And one of the big things about Rocket Fuel is identifying visionaries versus integrators. And this is what I was talking about a little bit earlier, where visionaries just go make money out of thin air. Oh, land deals, there's money in land. Cool. I'll go pick up a $30,000 land deal and flip it for 40 grand and do that a couple more times. That oftentimes is visionaries that just take action. Integrators tend to overthink things. They enjoy the work. They like learning more about details. And they're the ones that tend to drag their feet, not quite take as much action. So Rocket Fuel was a book that really changed the direction of our business by helping identify people and where they're best suited within our organization. So Gino Wickman's awesome. Love him.
Yeah, so good. Right there with you. I'm such a rocket fuel fan. I think I already know the answer to this, but are you a visionary or you're an integrator?
So Steve Harward is definitely full blown visionary. He's the CEO. I would say that I lean more towards integrator just due to the fact that I genuinely enjoy, I will read tax codes. I will go to irs.gov and read different tax codes that I want to get familiar with. I like giving these webinars and these presentations. But yeah, I would say that I fall more integrator and Steve falls more visionary. And I think it's been really good to understand why we've gotten along for the 12 years we've been doing this together.
Yeah, that's so good. So good. So, what makes you feel inspired or like your best self?
I think that being able, so since we started Prime Corporate Services, we have helped set up over 150,000 businesses. And every year that passes, our team has continued to grow. We're up over 300 employees total. And for me, it's not those 300 employees. It is about their families and the amount of mouths that are being fed through Prime Corporate Services. And what I love about what we're able to do is we're able to really build an awesome family, an amazing company with people that we genuinely care about, but we get to directly impact other business owners as well. And I need money to have the time freedom that I talked about to be able to have these amazing memories with my girls. But I get to do it while helping business owners fulfill their dreams. I've been fortunate to be able to create amazing success through hard work, an amazing company, and really cool services. But it's now about how many business owners we're able to impact and do that with. And I think having meaning in what you're really doing, it's okay for it to start with, I want to do this to make money. That's what it was for me. I wanted to make money. But once I made money, it became more apparent to me that I was doing it for a larger reason to be able to help other business owners with succeeding. So your why can change, and it doesn't always have to be mushy gushy. I'm cool with a why being money. I want to make money. It's certainly on the list for me. There's no doubt about that. It just changes with the time of year of when that is. During the summer, money's a little bit lower for me because I want to take my girls to the pool, right? It's okay for that to change, but as long as you're honest with yourself on what that is, allow that change to happen and keep working towards those goals.
Wow, that is so good. That is such great advice. You mentioned you've helped over 150,000 business owners start their businesses. I'm sure you have such a wealth of knowledge and experience around that. What are some of the two or three biggest takeaways that you've had in helping that many people get started? If you could just distill it down and share that with people that are about to start their businesses or even looking to scale their businesses.
When you see that many businesses, what is very obvious is the ones that become extremely successful, because we also file the tax returns, right? The ones that become very successful take action and are okay to fail forward. If they're losing, they are still learning lessons and they are optimistic about those lessons that they are learning. That would be the first thing, is just taking action and doing it. The second thing I would say is really just looking at everything as an opportunity. When you have an opportunity to get better, to make more money, or to learn some type of a lesson, you make a decision on whether you're going to do that or not. And it's okay to make a decision, whether it's right or wrong. I've made a lot of really bad decisions. I've put people in the wrong seats. But if you're slow to hire as you start to build a team, and you're quick to fire when you realize that you are not a fit with someone else, pick your business relationships wisely. It's like spending time or getting married. If you have a husband or a wife, I, embarrassingly enough, have probably spent more time with Steve Harward, my business partner, than I have my wife over the last 12 years. And I love them both to death. And if that wasn't the case, I would hope that I would make a different decision. I find people in business relationships that they're miserable with for so long that they don't enjoy the process and take less out of it. Finding enjoyment in what you're doing is critical to your success, in my opinion. That at least it has been for me.
That is gold. So good. Thank you. Thank you for sharing that with us. I just want to thank you again for sharing so much knowledge and wisdom with us. Thank you for giving to us today. I think that was some really great feedback and just great value. So thank you for sharing with us today. What are you currently looking for? How can we give back to you? What connections, resources are you currently looking for now?
Geez Louise. I'm supposed to be the one giving all the value. I would just say any feedback is always welcome, right? If there's anything that someone's wondering from a tax standpoint, let's talk through it. For us, it's more a matter of what we can do to serve and what we can do to help. I feel very fortunate in the sense that if you were to once again ask me this 5-10 years ago, I'd say, please make more introductions for more opportunities like this. So thank you for the opportunity. We're always looking for more opportunities. We're always looking to be able to provide more value to help more business owners. But the biggest thing would be give us the feedback that we're looking for, and please allow us to help you schedule that 1 hour call, speak with one of our advisors one-on-one, and talk to them about your situation and at least have a takeaway, take the action, be able to set yourself up the right way so you can focus on building your dream. We're here to help and we're here to serve long term. And we have this saying around here. We have legal and financial services, but it's sell the right person, the right product at the right time. Everyone's in a little bit of a different situation. So the more opportunities, the more connections, let's just continue to work together and build a relationship and be able to hang out and find areas that we can create more opportunity for each other. That's what I would say there.
Yeah, that's fantastic. And so if someone wants to have one of these consultations, wants to reach out to you, wants to work with Prime Corporate, how can they go about doing that?
Tell me the URL that was created again. We ended up creating
Start startprimenow.com.
Startprimenow.com. I like that a lot. Startprimenow.com. Prime Corporate Services. You can check out the website. You can look through those areas. Zach, make sure to get over those 250 deductions so that you can look through those in the Facebook group or anything else. But really anything, if there's anything that we can do to help from an asset protection and from a tax savings, don't hesitate to let us know.
Excellent. I love it. So much value. Thank you so much. Thank you guys so much. Tommy, thank you for joining us. This has been really incredible. So much great feedback, so much great information to get our businesses started the right way and scale to the next level. So thank you for taking the time to do that. Thank you, everyone, for joining us and asking fantastic questions. It's always a pleasure. Be on the lookout for our next Only Land Fans podcast episode. You can do that at our Facebook group and also join the community again, onlylandfans.com. Until then, take care, be safe, have a great week, and we'll catch you in the next one. Thanks, everyone. Bye-bye. If you're interested in hearing from other seven-figure land flippers about how they've started and run their businesses, then join us at onlylandfans.com. Looking forward to seeing you there.